So in the current year, Peter Corporation has year-end credit sales of $200,000 and a credit balance in the allowance for uncollectibles at the beginning of the period in the amount of $12,500. During the year, the company wrote off bad debts in the amount of $16,000, and in the past years, Peter Corporation has had a 4% uncollectible rate of revenues. The allowance for uncollectible accounts at the balance at year end is what? So we know we're calculating for our allowance for uncollectibles and more specifically the ending balance. So we can start this off by knowing our beginning balance is $12,500. So this is going to be a contra asset on our balance sheet. So keep that in mind that this is not going to be an income statement item, but we are applying an income statement approach for calculating our bad debt expense. So what we're actually calculating is going to be what is on the balance sheet, our ending balance. So our beginning balance is $12,500. We know that our percentage of sales is going to be the method that we are using to calculate our bad debt expense. And that is going to be what? 4% of 200,000. And that equals 8,000. We know that that is going to be increasing our allowance balance. One more thing that we need to note is that we have write-offs of bad debt in the amount of 16,000. So that means that we are going to be reducing our allowance. So 16,000 write-offs always reduce your allowance. So 16,000, 12,500 plus 8,000 less 16,000. Final answer is 4,500.